Okay, good morning, Ms. Reanne. Thank you for joining us today. We are excited to present Volkswagen Corporate Green Bond, an opportunity to align your financial growth with positive environmental impact. This bond is designed to fund sustainable projects while ensuring strong returns for investors like you. At Volkswagen, sustainability is at the heart of our business strategy. The proceeds from this bond will be directed towards renewable energy, adding 300 megawatt of clean energy capacity, which will significantly contribute to reducing carbon dioxide emissions. Other than that, it is directed towards climate protection in manufacturing as well, increasing production while reducing greenhouse emissions over by 27%. By investing in this bond, you'll contribute directly to achieving critical sustainability goals, including the UN Sustainable Goals and alignment with the EU Green Bond Standard. Okay, so here's our financial and environmental benefits. This bond offers a blend of financial returns and environmental impact where the yield is expected at 2%, ensuring competitive and stable income. The coupon rate will be at 1.5%, reflecting our strong financial position, and to show our environmental benefits, projects funded by this bond are estimated to reduce 500,000 tons of carbon dioxide annually. As for our preliminary pricing and structure, the bond size will be 5.54 billion, years to maturity will be 10 years, and of course, expected certification will fully align with the ICMA Green Bond principles. We are confident this bond represents an unparalleled opportunity to combine strong returns with meaningful impact. We are also confident that this opportunity offers you the potential for both stable financial returns and reasonable environmental impact.
So thank you, Mr. Chan, for the presentation. So as for my part of the evaluation process, I've been analyzing green bond across various sectors and regions to identify opportunities that align with the ESG strategy, especially in the transportation sector. So your bond issuance turns out as a compelling proposition given its alignment with sustainability goals and Volkswagen established reputation in green initiatives. However, before proceeding, I would appreciate additional insights to some key areas to better understand the risk portfolio and ensure that bonds alignment with its stated impact goals. First of all is the liquidity in the secondary market, which is critical for my decision-making process as it provides me with flexibility to adjust my holdings as needed. So could you elaborate on the measures being taken to enhance liquidity, such as engaging market makers or implementing buyback mechanisms? And additionally, any information on expected trading volume and Volkswagen's approach to support effective trading in this bond would be valuable. So furthermore, the next key factor is for accurate and transparent monitoring of environmental impact, so particularly on the CO2 reduction. So I would like to know if Volkswagen would provide detailed periodic reports on the progress and performance of this initiative. So lastly is to ensure ongoing transparency and accountability. I would recommend the inclusion of quarterly impact reports verified by a reputable third-party auditor because these updates would offer a better visibility into the project's progress and any challenges encountered. So independent verification of these reports would reinforce me as an investor, confidence in the fund's environmental claims and overall integrity.
Thank you, Volkswagen Financial. At Standard Form, our focus will be on assessing critical factors such as credit risk, bond structure, and ESG compliance to ensure transparency and reliability for investors. Volkswagen's strong market position and financial track record enhance the credibility of this green bond. However, we will examine the company's capacity to meet financial obligations over the 10-year maturity period, as it requires evaluation of long-term risks such as market volatility, inflation, and regulatory changes. While Volkswagen consistent performance in the automotive and financial sectors is a strength, we will also assess the potential impact of investment in green projects on the company's overall financial stability. The bond 5.54 billion, size suggests strong capital rising ambition, and we will assess whether the postponed project justify this level of investment. The allocation of proceeds to reflect a strong commitment to sustainability, notable the planned addition of 300 MW of renewable energy capacity and anticipated reduction of 500,000 evaluate how effective Volkswagen plan to manage risk, including regulatory checks, market volatility, and exclusion changes to achieve the promised outcome. Volkswagen alignment with the ICMA Green Bond principle and intention to meet the EU Green Bond standard enhance credibility. We will also verify the certification process and adhere to that framework to ensure transparency in fund allocation and project monitoring. This inclusion of third-party auditor and details impact reporting will be key factor in our assessment. All in all, we will conduct a true analysis to provide an objective assessment and ensure that the bond meets the high standard expected in today's green financial market. Thank you, and we look forward to future discussion and a detailed review.
Okay, all right. Good evening, everyone. As your regulator, let us first explore certification and standards. The foundation of any credible green bond framework. This alignment ensures that green bonds are not just a label but a meaningful commitment to sustainability. The first element is alignment with global principles. Green bonds must adhere to the ICMA Green Bond Principle, which are internationally recognized guidelines for transparency and integrity. These principles outline have 4 pillars, which is use of proceeds, process for project evaluation, management of proceeds, and the last is reporting. First, use of proceeds. Funds must be exclusively allocated to projects with clearly environmental benefits, such as renewable energy plants, energy efficient buildings, or sustainable water management system. And the second, process for project evaluation, which is issuer must clearly define and disclose how they select eligible project. For example, a company issuing a green bond for a solar energy farm should explain why the project aligns with environmental goals. Third, management of proceeds. To avoid merger, funds must be tracked in indicated accounts, ensuring they are used only for intended purpose. And the last is reporting. Regular update on the use of proceeds and environmental impacts are mandatory to maintain the transparency. And the second alignment is accredited certification. Independent third-party evaluation is crucial for ensuring the credibility of green bonds. Accredited organizations like the Climate Bonds Initiative provide the certification that confirm the environmental integrity of project. For instance, a transportation company issuing a green bond for electrical bus would need the certification that the project reduces greenhouse gas emission compared to the traditional buses. And the last element is clear environmental goals. Each project funded by green bonds must demonstrate measurable benefits. Thank you. That's all for me.
Okay, thank you everyone for the presentation earlier. So this opportunity sounds very promising, and I'm particularly intrigued by Volkswagen's commitment to sustainability and the positive impact of the projects being funded. So that's it. I have a few points that I would like to explore further before making the final decision. So first of all, it would be about the economic and market conditions. So while the 1.5% of coupon rate reflects Volkswagen's strong financial positions, I'd like to understand more about how this rate was determined, given that the current global economic conditions, including rising inflations and fluctuating interest rate. Would you provide more insights into the methodology behind setting this rate? So additionally, is there any flexibility to adjust the rate to ensure that the bond remains competitive in today's market landscape? So next, I'd like to discuss the bond's 10-year maturity period. While this time frame might suit some of the investors, others like myself, I may prefer a shorter durations to better align with the portfolio strategies. So would Volkswagen consider introducing a 7-year threshold of or offering alternative shorter maturity options to accommodate a broader range of investor preference? So next is regarding the transparency and accountability are also the key factors for me when considering a green bond investment. So could you elaborate on your plans for reporting on the allocation of proceeds and the environmental impacts of the funded projects? Specifically, how will you ensure independent verification of this reports and what measures are in the place of to guarantee the accuracy of environmental metrics, such as the projected CO2 reduction? So lastly, I would like to understand that the green bond issued in 2022 offer a slightly higher average coupon rate compared to those aligned with earlier frameworks such as 2020. So could you clarify whether the bond aligns with the 2020 or 2022 framework? And if so, whether the coupon rate has been adjusted to reflect this alignment?
As for us, based on the information presented, we would assign the initial AAA rating to this green bond, reflecting the strong financial structure, commitment to environment impact, and transparency. The bond's fixed coupon rate and the issuer AAA rating indicate low credit risk, although we recommend continuous monitoring of interest rate fluctuation to ensure it remains attractive in changing market conditions. Regarding market liquidity, the bond structure appears conducive to second market trading, but further detail on the role of market and their commitment to ensure liquidity would be beneficial. To enhance this issuer's credibility in the green space, we recommend highlighting past successful projects and providing clear benchmark for environment performance, which would boost investor confidence. Additionally, we suggest considering an inflation-linked chances to provide added protect against inflation, as well as a callable future to offer flexibility if market conditions change or other issuer financial situation involved. Overall, this bond is well positioned for an AAA rating, and with the suggested improvement, it will likely attract investors seeking both stable return and meaningful environment benefits.
Thank you, S&P. Well certification set the standard. Ongoing reporting and monitoring ensure that issuers stay accountable throughout the bond's life cycle. In annual reporting requirements, issuer must provide detailed annual reports, including allocation of proceeds, independent audits, and ongoing complaints and random audits. Allocation of proceeds, a breakdown of how funds are allocated, and environmental impacts metrics. These reports not only fulfill regulatory requirements but also reassure investors that their money is making a real difference. Second, independent audits. To safeguard the integrity of reports, they must be independently audited by accredited firms. This step is vital for preventing greenwashing and maintaining investor trust. For instance, if an issuer claims a certain level of carbon reduction, auditors would verify the data by examining emission report and the project performance. And last, ongoing compliance and random audits. Compliance does not end at issuance. Regulators conduct random audits to ensure issuers consistently meet sustainability metrics. If discrepancies are found, issuers are required to take corrective action immediately.
Okay, so thank you for addressing my concerns. So I look forward to reviewing the finalized terms and discussing the next steps for inclusion in my portfolio.
We will provide the financial rating upon review of the updated bond structure and additional documentation.
And we will continue to monitor compliance and ensure all the certification of and reporting requirements are met.
Okay, thank you all for your valuable input. We are committed in incorporating your feedback to enhance the structure, transparency, and the attractiveness of this bond. Please feel free to reach out with further questions or recommendations. I sincerely hope that we can achieve a sustainable and prosperous future. Thank you. Thank you for your thoughtful questions, and let me address each point. Okay, so for coupon rate and market conditions, the 1.5% coupon rate reflects our strong financial position, and we've carefully calibrated it to be competitive with similar bonds, as the bonds alignment with the 2022 framework indicates a competitive coupon rate, which may appeal to investors seeking higher yields in line with market conditions post-2022. However, we understand that in the evolving market environment, which is why, based on your feedback, we are open to discussing a rate of 1.75% to better match current market conditions and investor expectations. Okay, for maturity flexibility, we fully understand the need for flexibility in maturity options to accommodate diverse investor preference. We are introducing a 7-year tranche alongside the 10-year maturity, and this will give you more choices based on your investment horizon. Okay, for transparency and reporting, transparency is key for us. We are committed to providing annual reports and in response to your concerns, we will also offer quarterly environmental impact updates, all verified by third-party auditors. This will ensure you receive detailed insights on the allocation of proceeds and progress towards sustainability goals. We hope this adjustment will address your concerns and better meet your investment criteria. That is all from me. Thank you.
Thank you for your prompt response and the adjustment made to the bond structure. After reviewing the revised term and enhancement, we are pleased to provide our final assessment. Based on the increased coupon rate of 1.75%, the introduction of a 7-year tranche, and the commitment to quarterly environmental impact update, we are confident in maintaining the AAA rating for this green bond. This adjustment enhance the bond's competitiveness in the market while maintaining its strong financial and environmental integrity. The higher coupon rate improves the bond's attractiveness to investors, while the flexible maturity option cater to a broader investor base. Additionally, the quarterly reporting further strengthens the transparency and credibility of the bond, aligning it with best practice in the green bond market. Looking at the bond's performance, we anticipate strong demand from both risk investors seeking stable return and those focused on sustainable investment. The bond's robust environmental impact goals independently verify position it's well for long-term value creation. Give issuer AAA rating and the bonds enhanced transparency. We expect minimal volatility in its performance with steady return over time. The period reporting of environment metric will also help maintain investor confidence and sustain strong interest in the bond, ensuring solid performance in the secondary market. Overall, we are confident that the financial bond structure will meet investor expectations for both financial and environmental return.
Okay, so thank you for your thoughtful adjustment and for addressing my concerns with such transparency. So based on the revised terms, I'm confident about moving forward with this investment. So the increase to 1.75% of coupon rate is a significant improvement that makes the bond more competitive. So especially in today's economic environment with rising inflation and fluctuating interest rate. The explanation of how this rate was determined reflecting market trends and Volkswagen's financial strength. reassures me that this bond offers a strong return potential while maintaining its integrity. So the inclusion of a 7-year tranche alongside the original 10-year maturity option is exactly what I was hoping for. This flexibility caters to a diverse range of investors' preferences, allow me to align the investment with my portfolio strategy and manage risk more effectively. Having this shorter maturity option adds an extra layer of appeal and adaptability to this bond. And I'm also deeply value Volkswagen's commitment to enhance their transparency. The introduction of quarterly updates and the third-party verification provides confidence that the project will deliver on their environmental promises. So regular reporting on the allocation of proceeds and environmental metrics like the projected CO2 reductions demonstrates a strong accountability framework, knowing that these reports will undergo the independent audits further strengthens my trust in these initiatives. So additionally, the environmental impact of reducing 500,000 tons of CO2 annually is remarkable and aligns closely with my ESG investment priorities. The clear benchmarks for renewable energy capacity, energy efficiency, and emission reduction add the depths to this impact, and having these metrics independently verified gives them even greater credibility. So I'm also encouraged by the steps Volkswagen has taken to ensure liquidity in secondary markets. The involvement of market makers and mechanisms to support trading provide flexibility and security, which are critical for managing changing market conditions. Finally, aligning the bond with the 2022 Green Bond Framework and adjusting the coupon rate accordingly reflects a commitment to meeting the latest sustainability standards, which I deeply appreciate. Given these enhancements, I'm confident that this bond offers an excellent balance of financial returns, sustainability, impact, and transparency. So I believe it's a strong fit for my portfolio, and I'm excited to move forward with this opportunity.
Okay, a well-aligned market ensures that green bonds remain competitive, transparent, and accessible to a wide range of investors. Structure and pricing. Green bonds must be structured to attract diverse investors from institutions, funds to retail investors. Competitive pricing is critical, especially in emerging markets. For example, aligning bonds yields with regional benchmarks ensure affordability and liquidity, while still offering attractive returns. Regulatory compliance with financial regulation is essential for building a trustworthy market. This includes transparent disclosures on risks, pricing, and liquidity. Adherence to taxonomics like the EU Green Bond Standard, which define what's qualified as greens. Such elements ensure that green bonds meets the expectation of bond regulators and investors. Market confidence and growth. Transparency and enhance to sustainability goals enhance market confidence, encouraging repeat investment. This growth fosters innovation in green finance, such as transition bonds for industry working to reduce their environmental footprint. If any non-compliance issues are identified, such as ambiguous project eligibility or overstated environmental benefits, we flag this concept and mandate remediation before the bond can be approved. Post-issuance, we certify that the company adheres to reporting requirements by providing transparent, measurable impact data on how proceeds were allocated, and the resulting environmental improvements such as CO2, emission reduction, or energy efficiency gains.
Okay, we are thrilled to hear that you're comfortable with the revised term, and we have finalized all bond documentation, including the use of proceeds, the environmental impact projection and metrics, and also the compliance with ICMA Green Bond principles and regional regulatory. With the alignment with regional sustainability goals, the bond directly supports the EU Green Deal and the UN Sustainable Development Goals (SDGs) by focusing on climate action, clean energy, and also sustainable infrastructure. By adhering to the EU Green Bond Standard and the ICMA Green Bond principles, the bonds ensures credibility, transparency, and also accountability. Okay, for market differentiators, the AAA credit rating for the 7-year tranche and the AA plus for the 10-year tranche reflecting robust financial stability. Regulated party verified reporting strengthens investors' trust and ensures transparency. Competitive yield and diversified project funding make this bond a standout in the green finance market. And with these updates, we are now ready to proceed with the final approval and listing of the bond. We are confident that this bond offers an excellent opportunity to achieve both strong financial returns and meaningful environmental impact. Thank you.
Thank you for providing the final structure and term of the Volkswagen Financial Green Bond. After thorough review, we are pleased to assign the following final rating: AAA for the 7-year tranche and AA plus for the 10-year tranche. The AAA rating for the 7-year tranche reflect the bond's strong financial stability, low credit risk, and commitment to delivering tangible environmental impact. The coupon rate of 1.75% enhances its attractiveness to investors seeking variable return, while the issuer financial strength ensures a low risk profile. The AAA plus rating for the 10-year tranche indicates strong creditness but reflect the slight risk associated with long-term bond. This tranche offers stability for long-term investors with competitive yield that align with market expectation for extended maturity. In terms of long-term performance, we expect the bond to perform favorable in the market thanks to its solid financial structure, ambitious environment goals, and aligns with the EU Green Bond deals and ICMA Green Bond principle. The bonds focus on reduced CO2 emission and promoting renewable energy will likely attract sustainable investment, particularly from institution investor with ESG mandated. The committed to third-party verified reporting adds an additional layer of transparency, ensuring ongoing investor confidence. We anticipate steady demand both in the primary and secondary market, with the bond delivering attractive yield while supporting significant environmental impact. Overall, the bond is well positioned for long-term success, appealing to investors seeking both financial return and positive contribute to sustainable goals.
Okay, so I really appreciate for all the informative discussion and for addressing my concerns so promptly. So after reviewing the updated terms, I'm confident that this one is a strong fit for my portfolio. The 1.75% coupon rate is more competitive, improving return potential in the current market. The flexibility with both 7 years and 10 years tranche allows me to align the investment with my strategy while managing my risk. So the enhancements, transparency, including quarterly updates and third-party verification, provides assurance that the project will deliver on their sustainability promises. This level of accountability gives me confidence that Volkswagen is committed to its environmental goals, and I'm very excited to move forward with this investment as it not only offers strong financial potential but also supports the Volkswagen sustainability efforts. So this one is a great opportunity, and I'm happy to proceed.
Okay, I have reviewed all bonds documentation to confirm compliance with frameworks like the ICMA Green Bonds Principle or the EU Green Bond Standard. This includes verifying that all proceeds are allocated to certified projects and that impact metrics are credible. Once compliance is confirmed, the bond is approved for issuance. This process ensures not discrepancy in documentation which could undermine investors' trust.
Okay, thank you for your trust and collaboration. We look forward to having you as an investor in Volkswagen Corporate Green Bond. Thank you.